Is the decade-long seller's reign over? For more than 10 years, sellers have had all the power. You listed your house, got several offers, chose the best one, and that was it. But it wasn't always like that. After the Great Recession in 2008 through 2009, when the housing bubble burst, prices dropped and sellers lost all their leverage. From there, it took years for sellers to slowly regain control. And once they did, they held it for more than a decade. Up until now, the pendulum is finally swinging back towards buyers. And according to the latest housing data, we're now seeing the strongest buyer's market in over a decade. But here's the question everyone wants answered. How long will it last, and what would it take for it to flip back again? Before I dive in, if you're new to my channel, welcome. I'm Lily Vallario, and I give you straightforward, no fluff real estate advice that you can actually use no matter where you are. And if you're feeling generous today, please consider hitting that like button and subscribing to my channel. It helps with the YouTube algorithm and pushes my video out to others. Thank you very much. Now I know what you're thinking. Lily, home prices are still holding up. How can this be a buyer's market? Here's the thing. It's not about whether prices are rising or falling. It's about leverage. Who has the power in negotiations? Who's making the terms? And right now, for the first time in years, buyers are calling the shots. If you're thinking about buying or selling in the next 6 months, you need to understand this shift because the old playbook doesn't work anymore. Let me break down what's actually happening out there. First, inventory levels are way up. We haven't seen these many homes sitting on the market since 2013. That means buyers have choices again. And when buyers have choices, sellers lose their pricing power. Second, cancellation rates are through the roof. About 15% of sales are falling through right now. That's huge. What's happening is buyers are putting in offers, getting through the inspection period, finding a list of issues or repairs that need to be addressed, and asking sellers to fix them. But many sellers aren't budging. And in this market, buyers don't feel pressured to compromise. They're simply walking away. Their mindset is, if you're not willing to work with me, I've got plenty of other options. Third, the buyer to seller ratio has completely flipped. For years, we had way more buyers than sellers. Now it's the opposite. Sellers who wouldn't budge in June and July are still there sitting on the market with their homes unsold, wondering what happened. And here's the reality. Buyers are getting more aggressive with their initial offers, coming in below asking price because they know time is on their side. So what's causing this shift? It's a perfect storm of 3 factors. First, mortgage rates. Yes, they've come down from their peaks, but they're still around 6.3%, and that's double what people got used to during the pandemic. A lot of buyers thought that rates would drop faster than they have, so they're still waiting on the sidelines, creating this low buyer demand. Second, we've got this inventory surge, especially in markets where builders have been busy. Places like Texas and Florida are seeing actual price declines because there's just way too much supply. Builders got so aggressive during the boom years, and now we're seeing the consequences. But here's the third factor that nobody's talking about enough. Economic uncertainty. According to the research, 44% of Americans considering a major purchase like a home are now deferring because they're worried about losing their jobs or the economy overall. That's massive. Think about it this way. Even if mortgage rates drop to 5.5%, if people are scared about keeping their jobs, they're not going to buy a house. The Fed is trying to thread this needle where they lower rates enough to stimulate the economy, but not so much that it causes inflation or signals that we're heading into a recession. And then you've got all these families who are stuck. They bought their house when rates were at 3%, and now they can't afford to move because their mortgage payment would double. So they're sheltering in place, which creates this weird dynamic where all the demand is just sitting on the sidelines, waiting for the right conditions. Now, here's where it gets really interesting. This buyer's market isn't hitting every property type the same way. In the luxury market, things look steadier. Wealthy buyers often have cash. They're less rate sensitive, and they're still out there making moves. But here's the nuance. Just because there's activity doesn't mean luxury homes sell themselves. High-end buyers are savvy. They know they have leverage and they expect value for their money. So even at the top end, homes still need to be priced and presented strategically to move. Starter homes and condos, on the other hand, are feeling the pressure. That's always the most volatile segment of the market. And right now, it shows, especially with downtown condos, which are lingering the longest. Here's what's crazy. Back in 1982, 40% of new homes built were smaller than 1,400 square feet. And in 2023, only 9% hit that mark because builders have been focusing on higher margin luxury properties because that's where the money is. But that also means that there's a shortage of affordable starter homes for young families. So if you're a first-time buyer looking for something under $300,000, you're competing for a tiny slice of inventory. But if you're looking at the $800,000 house, you've got way more negotiating power than you've had in years. All right, so if you're a buyer, how do you take advantage of this market? First, you need to understand that the negotiation game has completely changed. For years, buyers had to come in over asking price with no contingencies just to get their offer considered. Those days are over. Now, you can be strategic about your offers. Come in a little below asking price, not because you're trying to lowball the seller, but because that's where the market is heading. Sellers are considering these offers because they know that if they don't, they might be sitting on the market for months. But here's the key. You can't just throw out a low number and hope for the best. You need to do your homework. Look at recent sales in the neighborhood. See how long other properties have been sitting on the market and understand the seller's situation. Are they already in their next house? Are they relocating for work? That information gives you leverage. And don't be afraid to include contingencies again. Inspection contingencies, appraisal contingencies, and financing contingencies are back on the table. If the seller pushes back, remind them that there are plenty of other options out there. The inspection period is where you really have power now. If you find anything wrong, and I mean anything, use it as a negotiation point. Sellers can't afford to let deals fall through like they could a year ago. Now, if you're a seller, I'm not going to sugarcoat this. You need to wake up and smell the coffee. The market has shifted. And if you're still thinking like it's 2022, you're going to be sitting on the market way past Christmas. First thing you need to do is price aggressively from day one. I'm talking about pricing at or slightly below recent comparable sales, not above them. I know that hurts to hear, but here's the reality. Buyers have options now, and they're not going to overpay for your house when there are 5 others just like it down the street. Look, I get it. You're thinking about what your neighbor got 6 months ago, but that market is gone. Buyers are thinking about what they can get 6 months from now if they wait. You're competing against time itself, and time is not on your side. Get your house in perfect condition before you list. I mean perfect. Fresh paint, new carpet, not shampooed, but new, and fix every little thing, because if buyers don't feel connected, they're gone. If they walk in and see bold paint colors, personal stuff, or a house that just feels average, they're gone. You've got to make it neutral, move-in ready, and inviting so they can actually picture themselves living there. Consider offering incentives. Maybe you cover some of the buyer's closing costs, include a home warranty, or offer a rate buy-down. These don't cost anything up front. They're paid at settlement and simply come out of your net. And here's the mindset shift. You're not losing money. You're just making a little less, and that little less could be what gets your home sold instead of sitting on the market for months. And here's something most agents won't say out loud. If you get a good offer, take it. And by good, I don't mean just anything. I mean a strong buyer with reasonable contingencies, fair timelines, maybe a small concession or a little under asking price, but still moving quickly to closing. That's a solid deal in this market. Trying to squeeze out every last dollar can backfire. Sometimes digging your heels in over $1,000 ends up costing you $10,000 because 30 to 45 days later, you do a price reduction and now you're chasing the next buyer who still comes in with the same contingencies anyway. Before you assume this buyer's market is just temporary or that it's only slow because it's October and kids are back in school and the holidays are around the corner, let's be real. Yes, mortgage rates are a huge factor, and if they drop below 6%, we'll probably see more buyers return. But that doesn't mean the market flips overnight. This isn't just a seasonal slowdown. We're not going back to the frenzy of a couple years ago. What we're seeing right now feels a lot more like the normal market we had before the pandemic. Homes taking a little longer to sell, buyers having options, and sellers needing to price strategically. A rate cut might help, but it's not a magic switch. The second factor is economic uncertainty. A lot of buyers right now are holding back because they're nervous about job security and the overall economy. And that's understandable. When people feel uncertain, they don't make huge financial moves. But here's the thing, even if the economy steadies and buyers feel more confident, that doesn't mean we'll suddenly see a buyer frenzy. What it does mean is a gradual release of pent-up demand, and that's going to show up as a steady activity, not a sudden spike. Another factor is the lock-in effect. Millions of families are sitting on those 3% mortgages, and that's keeping them from moving. But at the same point, life changes. Job relocations, growing families, downsizing will force movers regardless of interest rates. If that happens, we'll see more buyers coming into the market. But remember, those same families instantly become sellers too. So while demand will rise, inventory will also increase. And that's why it balances itself out more than people think. And then there's the wild card, government intervention. There's been talk about declaring a national housing emergency and introducing policies to either boost supply or push demand. That could definitely shake things up. But again, it's not something that guarantees a dramatic overnight shift. So here's what you need to understand. We're in a transitional market right now, and these don't last forever. If you're a buyer, this is your window. You've got more negotiating power than you've ever had in over a decade. But that power comes with responsibility. Don't waste time trying to time the bottom of the market perfectly. If you find a house you love at a price that works for your budget, make your move. If you're a seller, adjust your expectations now, not 6 months from now when the stress sets in. I know you're thinking, I'm not in a rush. I'll just wait for the right buyer. I hear that all the time. But here's the truth. Once your home sits on for a few weeks with little traffic, the waiting game takes an emotional toll. The sleepless nights start. The mortgage payment feels heavier. And if the house is empty, it's just money going out the door. Price it right. Present it perfectly and be ready to negotiate. The sellers who adapt to this new reality are the ones who are going to get their homes sold. And remember, real estate is still local. What's happening in most of the country might be completely different from what's happening in your immediate area. Work with an agent who understands your specific market and can give you data-driven advice, not just generic market commentary. The bottom line is this. For the first time in over a decade, buyers have leverage. Use it wisely if you're buying. Respect it if you're selling. And don't assume this market is going to last forever. Markets always change, and those who adapt first always win. So tell me in the comments, do you think buyers really have the upper hand right now, or is it different in your market? And if you found this video helpful, please make sure to hit that like button and subscribe for more no-fluff, straightforward real estate advice that you can use anywhere you're at. Thanks again, and I'll see you in the next one. Bye.